Welcome back to Cambridge House Live. I'm Vanessa Collette, and I'm pleased to be joined by Peter Spina this morning. He's the president and CEO of both GoldSeek and SilverSeek.com, which are two of the largest precious metals websites in the world. It's great to see you again, Peter.
It's great to be back.
Now, Peter, we saw a very unexpected move by the Swiss to unpeg their currency from the euro. Did that surprise you?
I think it was surprising for me. At the time it happened, it was obvious that at some point they were going to have to do something because they were buying so many euros, 400 to 500 billion in the reserves. Their reserves were growing very quickly, and with next week's quantitative easing announcement by the ECB, did they want to be also printing more francs and buying more euros? So they decided they needed to cut their losses quickly and get out of this trade. And it was quite a surprising move. It caused a big fluctuation in the currency markets, especially between the euro and the Swiss franc. And I think it was very unexpected for a lot of people in the markets. And we're going to see a lot of fallout from this. Some big losses are going to emerge in the next weeks. There are going to be funds that have been obliterated. And it's really a big move. And I think really the key here is that we need to expect the unexpected in this market.
Right. And so they had to basically do this overnight. I guess there was no other way.
Yeah, if they announced that they were going to do it another way, I think it wouldn't have been as effective. They had to do something. These kind of moves have to happen overnight. So.
And it's a defensive move in order to protect themselves from the easing that's going to start.
And I think the surprising thing was back in, was it late November, they had the initiative, the Gold Swiss initiative, to tie 20% of the reserves to gold. That failed, and they were arguing that they didn't want to have a strong currency because it hurt the exporters. Well, in the end, it's more important to have a currency that doesn't go to zero than trying to protect certain industries.
Well, now that the Swiss has been, since they made this announcement, the franc's been soaring and the euro's dropping. So what is this going to mean for the Swiss economy?
Well, it's going to be very difficult for them because they're going to have to pay a price for it. There is going to be a definite issue with their exporters. Marginal exporters are going to get, they may go under, and you may have a big drop in tourism, and there might be a pretty severe economic consequence, a recession developing there. But at least they're not going to destroy their currency in the process. And I think that's very important, especially for a safe haven like Switzerland that it used to be. They're trying to return back to that status. And that is a big shift, I think, for the currency markets, for the global markets. And it's a sign that, okay, when it comes down to it, it's the last man standing, and national interests will take hold. And these partnerships that have developed can break apart very quickly.
Right, these alliances, absolutely. Now we've seen gold has been steadying a bit and actually on the way up. So what do you see happening in gold and silver?
Well, last year at this show, at this interview, I was talking about 2014 being a great year to trade, and that was exactly what happened. We did a bottoming process, and despite this kind of deflationary scenario that's been developing, oil dropping, now copper, commodities dropping, gold has held up, and that's at the same time as the US dollar has been rallying. So the two the king currency, the king dollar has been rallying, and the king money, gold, has now been rallying. And that's a very interesting situation.
Them both going up at the same time.
It's very odd, and it's very good for the miners, which we can talk about later. But for the gold market this year, I think it's a sign with the Swiss bank, what's happening with the ECB, all these geopolitical issues that are happening. Gold, I think, has made a big move this last week, and is indicating that we're probably starting it's in a big breakout. I wouldn't put all my money that this is a reversal, but I have a lot of confidence that we're going to see this price move a lot higher. I wouldn't be surprised we see $1,350 pretty quickly, upwards of $1,500 an ounce in US dollar terms. Now look at Canadian dollar prices. Gold price is 20% higher in the last year compared to US dollar prices. So the gold price has been surging in foreign currencies and is surging in the US dollar. So that's a very, it's a pretty bullish reversal.
What do you see happening now with gold juniors and the miners?
Well, they benefit now from being so oversold, such negative sentiment, and there has been such an overriding fear in the mining sector that gold's going to $800 an ounce. So with that, we're going from an extreme fear now to bullishness, and those miners can react very positively. They have an additional benefit now because they've been cutting costs very aggressively. Their margins.
A lot of downward cost pressure. We're starting to see some of that.
Benefit. And if you're a foreign miner, you have a weak domestic currency, so you're seeing your foreign gold price going up, you're getting a lot more for it. So I think we'll see some really good numbers starting to come out of the miners, and I would expect them to have a very good, especially in the next 2, 3, 4 months. I wouldn't be surprised. We've seen maybe 50% plus increase in some of these stocks. They could easily go up another 50, 100 to 300% before maybe we get another pause. So this could be a really big turning point for the miners.
And what are you doing with your investments right now?
I've been trading quite a bit. The last several months have been quite good, going kind of both sides of the trade, but right now I've taken a very bullish position. I've been buying silver and gold futures contracts, and at this point I think it wouldn't be a bad idea to buy some call options in the near future. If we do get a breakout, the risk-reward opportunities are incredible.
And what are you seeing? I know you've been following Russia a lot, so what do you think of the prospects for the Russian economy?
Well, that's a big key player in this whole global geopolitical situation going on, and financial, and specifically even to the gold market, because we don't know what Russia is going to do here to counteract this aggressive move by the Western powers. Russia's being surrounded by the West. NATO is circumferring Russia. They are at a point where they have to do something because they are being marginalized. So now that the sanctions have been enforced and they're having problems, their foreign currency reserves have dropped from nearly $500 billion to about $380 billion. Limited capital controls are taking place, but they now are taking measures that I think that we'll see shortly. It'll be pretty shocking, I think, for the financial markets, whether that's more directly linking and say, okay, we're selling you oil, don't give us dollars anymore, don't give us euros, give us gold, or pay with yuan, or something big will happen there. Right now, Russia's buying a lot of gold. They're taking their dollars, and de facto, they've already broken that link with the reserve currency in dollars. They're getting rid of their dollars. They want to hold something else, and gold is one of the primary assets they're looking at to
buying a lot of domestic gold production, just like China.
Absolutely, and that's a big key with China. If the Western powers, if the U.S. empire can marginalize Russia, China all of a sudden becomes very vulnerable, and that BRIC alliance, all of that goes away, and that threat to the U.S.'s power goes away. And now you have this new world order coming into effect, and there's really nothing to counterbalance the U.S.'s global supremacy. And with today's technology and the ability to have, you can actually have a global empire. And the U.S. I think that's the objective here, is to create that. So I think there's going to be more of that. We have the Ukraine situation is going to get a lot worse. You're going to see probably that proxy war return. And Ukraine financially is the disaster. The IMF has been putting them into severe debt, and they own them. And the IMF has the Ukraine has been sold out. So they thought they were in a bad situation being aligned with Russia. Now that they're going to be gutted by the West.
So you said a big move is coming, and you think potentially that could be the end of the petrodollar?
I think it's being threatened. It's definitely, there's a lot at play here. The U.S.'s power is being at play. I mean, Russia's trying to court Europeans onto their side. So there's a lot of maneuvering being done right now. And a big part to the U.S.'s global power has been the U.S. dollar. Today, even over the last 10, 15 years, as the dollar had been falling, the global reserve currency, the U.S. dollar, has been still about 2/3 of the current currency reserves, but in global trade, it's 81%. So almost everyone has to use the U.S. dollar. So I think the yuan is a bit of a competitor, but ultimately the king money, king currency will be gold, and that's starting to return. And once the Main Street investor starts to understand that, and we may have just started to see that. In fact, the last couple weeks, the GLD fund saw record low holdings. And within a couple days, 828,000 ounces of gold was purchased by Wall Street. If they continue that rate by summertime, we have a record holding of gold in the GLD. They've sold off 20 million ounces. Well, obviously that 20 million ounces isn't there anymore. A lot of that's been moved over to China, India, and Russia has bought that out. So where are they going to get the gold? And that's the situation that develops. If the Main Street crowd starts to buy gold now instead of selling it, there's going to be such a squeeze on the gold price. Gold could be at record highs a lot faster than anyone could think.
Well, you're sounding very bullish. Now let's look at the mining stocks. What's your take there?
So they have been forming a pretty good bottom. You still have to be very selective, but there are a lot of producers out there that are building good balance sheets. They're cleaning up some of their bad assets and so on, and they've cut their costs. So now they're making some decent, healthier profits. And there are companies out there, say, who produce that $1,200 an ounce gold that we're looking at. They might be going into bankruptcy in a year or two at these gold prices. If they went down any lower, well, now they're so leveraged to the gold price. And if gold goes to $1,500 an ounce, some of these mining companies could really explode. So
this could be the time to buy juniors.
There could be some very big gains in the near future.
Excellent. Well, thank you so much for joining us again today, Peter. It was a pleasure having you on the show.
It was a pleasure to be back. Thank you.
For more videos, go to our Cambridge House YouTube channel.